Welcome to the Mint. I'm Andy Hodges. Zimbabweans brace for higher electricity prices. You know why? Because industry backs ZESA's tariff increase request. All this and more on the Mint. Don't go away. We'll be right back. Now, as usual, we look close to home at the Zimbabwe Stock Exchange. Now, as I've told you, in recent weeks, the stock market has pretty much tread water as the market looks at which way to go, bearing in mind the policy pronouncements given by the central bank and government, specifically SI 142. However, analysts do believe that the stock market is undervalued, and there's great value in some of the stocks. And we always urge you on the Mint to look at the stock market as an alternative investment platform for your hard-earned money. You have stocks like Econet, of course, the usual. You've got Simbisa, and also you've got Cassava as well, which have great products. But more importantly, you have counters on the stock market that have diversified their portfolios into Southern Africa. And those portfolios are great for you as an investor. In other words, you're not just hedging on the company's performance locally in Zimbabwe, but also looking at their regional exposure and how it will affect their share price. So stocks like, for example, OK Zimbabwe, they are undervalued as well, even though, of course, they are a local-based company. Look at their profit margins. Zimplow, they just announced a 900% increase on profits year on year. Great brand, and they've got export orders as long as your arm. So please, we urge you, have a look at the Zimbabwe Stock Exchange. Look at it. It's a great form of investment for you and your hard-earned money. Now then, please, your comments coming through on Zim Paper's TV network Facebook page and our website, ztn.co.zw. We've got great programming for you. We've got Extra. That's on 3 times a week, Monday, Wednesday, and Friday. Our top entertainment show, that's at 2 p.m. We've also got Dreamstar. That kicks off on the 31st of August. Make sure you look at ztn.co.zw for the dates and timing of that. Heartbeat, of course, every second week. The Couch, which is on tomorrow at 2 p.m. Your only sports show that you're ever going to watch if you watch it. And, of course, tomorrow afternoon, a great show, The Chase, 6:30 p.m., live from the venue in Avondale. We're looking at Zimbabwe's political dialogue, the final solution. So don't miss the programming on ztn.co.zw and, of course, our Facebook page, Zim Papers TV Network. Now, South African Airways is offering its business class passengers a new perk. They don't have to share a bus with the rest of us ordinary people on the plane. Sure, it's little things that make airlines' small cohort of premium passengers feel special. It may keep them coming back and encourage them to pay enormous fees for little more than a room and metal cutlery. But if you are a bankrupt state-owned enterprise and want public support, should you waste your money on frivolous incentives? Hey, your comments on that story, Facebook page, Zim Papers TV Network, and of course, ztn.co.zw. The Federal Reserve Bank is widely expected to cut interest rates for the first time in more than a decade this week. But such a move is widely seen as a preemptive one to protect the economy from global uncertainties and trade pressures, in contrast to some other countries that face more imminent risks. U.S. gross domestic product, GDP, increased at a 2.1% annualized rate in the second quarter, above forecasts of 1.8%, as a surge in consumer spending blunted some of the drag from declining exports and a smaller inventory build. Investors are also likely to closely monitor whether the central bank will signal more cuts over the coming months. Economists mostly anticipate anywhere from 1 to 3 rate cuts this year. Now, the U.S.-China trade talks are set to resume. Officials from the U.S. and China are set to meet in Shanghai this week for their first face-to-face talk since the G20 truce last month. However, expectations for the world's 2 largest economies to secure a comprehensive trade agreement are low. Now, more than 40% of the S&P 500 companies have reported quarterly earnings for the second quarter. Of these companies, 76.4% have posted a stronger than forecast profit. That's according to FactSet. Now, European markets, European stocks turned positive. European stocks reversed early losses Monday as U.S. and Chinese trade negotiators prepared to meet in Shanghai for the first in-person trade talks since the truce was announced in June. The Pan-European Stock 600 traded 0.2% higher around an hour into the session. Autos slipping 0.6%, while telecoms and financial services stocks surged 1.9% and 1.7% respectively. In the UK, new British Prime Minister and Conservative Party leader Boris Johnson plans to visit Scotland on Monday after the head of the Scottish Conservatives said she would refuse to support the UK leaving the European Union without a deal. The Confederation of British Industry, CBI, also said on Sunday that the EU was lagging behind Britain in its preparation for a no-deal Brexit. In European corporate news, mergers and acquisitions are high on the agenda. Reuters reported on Sunday that the US buyout firm Blackstone Group is expected to announce the merger of its majority-owned financial data firm Refinitiv with the London Stock Exchange Group this week. The merger is expected to face a long antitrust review before it can be signed off. London Stock Exchange Group stock rose 14.8% in early trade. The Financial Times has also reported a potential tie-up between food delivery companies Just Eat and Takeaway.com to form a £9 billion, $10 billion group, which would outsize both Uber Eats and Deliveroo, the two big giants in the UK. Just Eat stock surged 24% as investors reacted to the news. As earnings season rumbles on, Ryanair on Monday reported a 21% fall in first quarter net profit due to lower fares and higher costs, but reiterated its full-year guidance. Its first quarter profit came in slightly ahead of analyst forecasts and drove the company's stock 3% higher. Heineken half-year profit missed expectations on higher costs, with the Dutch drinks company reporting a net profit of €1 billion, causing its share price to slide 5.3% to the bottom of the European blue chip index. Asian markets, stocks in Asia mostly slipped on Monday as investors awaited the resumption of US-China negotiations in Beijing this week amongst low expectations for a major breakthrough. And all I'm talking about is new talks between the US and China. The world is looking at this. The world's economies are looking at this and are hoping for a deal. Shares in mainland China were mixed on the day. The Shanghai Composite slipped 0.12% to 2941.01, while the Shenzhen Component and Shenzhen Composite were fractionally higher at 9354 and 1574 respectively. Hong Kong's Hang Seng Index dropped 1.16% in its final hour of trading as tensions remain high in the city following another clash between protesters and the police over the weekend. Shares of life insurer AIA declined 2.02%. Shares of conglomerate SoftBank Group soared 3.88% after the company's founder and chief executive, Masayoshi Son, told the Nikkei in an interview that he expects initial public offerings or portfolio companies in its Vision Fund almost every month, quote, by around next year. Son also said Monday that SoftBank will invest $2 billion in Southeast Asian ride-hailing giant Grab, according to a Reuters report. And meanwhile, in Singapore, DBS Group on Monday, ahead of the market open, posted a 17% increase in second quarter profit, which came in at $1.6 billion. Which is against $1.37 billion a year earlier, the beating estimates. The stock was 0.82% lower in afternoon trade. Again, US-China trade talks, as I said, are also set to resume this week, with a trade delegation from Washington scheduled to fly to China yesterday for negotiations with Beijing officials. Meanwhile, Chinese industrial profits fell in June, according to the country's National Bureau of Statistics on Saturday. Industrial profits fell 3.1% in June from a year earlier, following a 1.1% gain in May. Now then, let's have a look at African currencies. Shall we see how the US dollar is trading? Well, the dollar held near a two-month high on Monday, ahead of what is expected to be the first US interest rate cut since the financial crisis this week, while Britain's rising Brexit uncertainty knocked the pound to a fresh 28-month low. Most major currencies were keeping moves small ahead of Wednesday's expected 25 basis point cut by the Federal Reserve, but there was at least some action to fill the void. The pound saw another 0.3% loss after Britain's new foreign minister and former Brexit chief Dominic Raab told the European Union it needed to change its stubborn position to avoid a no-deal crunch in October. Sterling's drop also followed comments by senior UK ministers over the weekend that the government is working on the assumption that the European Union will not renegotiate its Brexit deal and is ramping up preparations. An opinion poll also showed new British Prime Minister Boris Johnson's Conservative Party had opened up a 10-point lead over the opposition Labour Party. According to speculation, Johnson will call an early election. And in Japan, the Bank of Japan is starting a 2-day policy meeting yesterday. Market players expect the BOJ to send dovish messages, and it could try to put a semblance of easing by changing its forward guidance. But the central bank looks certain to refrain from rate cuts and other major policy easing, given its lack of policy ammunition. Commodities. Check out what commodities are doing around the world. Prices and precious metals. Now, gold was steady as markets eyed the Federal Reserve Bank. Gold prices were stable ahead again of the Federal Reserve Bank meeting. Everything this week is about the Federal Reserve Bank meeting happening on the 31st of July. The markets, as I keep telling you, are anticipating, have 100% factored in a 25 basis point cut. And, of course, markets are hoping for a 50 basis point cut. But the prices of gold, however, have halved in previous weeks, pressured by a dollar strength and robust U.S. economic data. On the technical front, gold looks neutral in a range of 1,412 to 1,427 per ounce. And an escape could suggest a direction. That's according to Reuters technical analyst Wang Tao. Among other precious metals, silver and palladium inched slightly higher. Silver at 16.41 per ounce, palladium 1,536 per ounce respectively. Platinum was also up to 868.11 per ounce. Now, it's important why we tell you about commodity prices around the world and metals. Of course, Zimbabwe not just only being an agro-based economy, but also being a mining economy. The impact of prices of precious metals does in fact hit our export proceeds. And so it's good to see that at least metal prices in the short term are firm. Coupled with firm prices in iron ore, it bodes well for our mining sector as long as we ramp up production and start exporting. Gold, for example, we need to stop the leakages of gold and try and get gold in the formal system. Analysts predict that gold tonnage will go up if we give the miners the right prices and, of course, the right in US dollars. So, of course, we're going to keep an eye on commodity prices because of its impact on Zimbabwean business. Now, in energy, oil prices fell on Monday as investors fretted over the outlook for global economic growth, while weekend talks between Iran and major powers ended on a generally positive note, suggesting an easing of tensions in the Middle East. Economic growth in the United States slowed less than expected in the second quarter, with a boom in consumer spending strengthening the outlook for oil consumption. But growth outside the U.S. is slowing faster, due partly to the impact of the U.S.-China trade war. An emergency meeting with parties to Iran's 2015 nuclear deal was constructive, but there are unresolved issues, and Tehran will continue to reduce its nuclear commitments if Europeans fail to salvage the pact, Iranian official Abbas Akhbarichi said on Sunday. The point here is this, of course, is that the United States pulled out of the Iran nuclear deal. And that was a big problem, but the rest of the allies of the US, Britain and Europe, for example, continued with the deal. Of course, the deal said that Iranians would not produce weapons-grade plutonium, and they apparently have kept to their word. However, the US does not believe that and pulled out. where, as I said, its allies have stayed in. So that has an impact on oil, of course, because any instability in the Middle East will affect oil prices. Anyway, that's it for In the Market. So please, your comments, keep them coming in on our Facebook page, Zim Papers TV Network, and of course, ztn.co.zw. Check out our programming. We've got Extra, the top entertainment show in the country, Mondays, Wednesdays, and Fridays at 2 p.m. Dream Star, new show that's coming up 31st of August. Keep your eye out for that. Of course, The Couch, that's on tomorrow every week. It's on at 2 o'clock tomorrow. Your only sports show. You've got to come to ZTN if you want to find out about sports with Howard Musonza. And of course, tomorrow, a great show, The Chase. We're looking at Zimbabwe's political dialogue, the final solution. We have panelists all across the board. You've got to watch that 6:30 Zim Papers TV Network Facebook page, ztn.co.zw. And of course, coming up after the breather, are you going to get more electricity price hikes? Well, industry backs ZESA tariff hikes. All this and more coming up after the break. I'm Andy Hodges, live from ZTN studios here in Harare, Zimbabwe. Now, this is our section of In the Economy. Robert K. Graham was an entrepreneur who invented shatterproof lenses for eyeglasses. Today, though, he's probably better remembered for the controversial sperm bank he started. Called the Repository for Germinal Choice, the sperm bank only accepted donations from people who were considered extraordinary in some way. Some were Nobel Prize winners, some were geniuses, and some were gifted athletes. Graham's reason for starting the sperm bank? Well, he wanted to create a better human gene pool, a mission that did not go over well with many people who compared his ideas to Nazi eugenic programs. The sperm bank was closed in 1999, 2 years after Graham's death. It claimed to have produced 220 children during its 19 years of operation. I thought we'd just give you a little bit of a laugh about that, because obviously in Zimbabwe, I'm not sure we have any sperm banks here, and I'm not sure that we need them. Now then, our main story today, Zimbabweans, are you getting prepared for increased electricity costs? Because Zimbabwe's industry has endorsed a power tariff hike amid indications players are operating with this unsustainable generator tariff of 40 cents per kilowatt per hour. This is equivalent to $3.20 kilowatt per hour at the prevailing interbank rate. Zimbabwe's National Chamber of Commerce, ZNCC, Harare chapter chairperson Mike Kamungerumu said the present tariff of 0.09, that's Zim dollars, 0.09 cents per kilowatt hour being offered by the company's power utility company ZESA Holdings, ZESA, was unsustainable and needed to be urgently hiked. We sent Mint reporter Ndaka Majaka to find out more about this issue. Listen to this report.
The Mint understands that a new tariff regime is now sitting with the Office of the President, awaiting executive approval.
The current tariff that ZESA is charging is not sustainable because they are actually incurring losses each kilowatt hour that they are selling. It is business because we don't have power at the moment. We are running generators and the cost is huge. So effectively, business is currently paying around 30 cents to 40 cents, US cents for that matter, per kilowatt hour. And we are saying, if it will improve the supply of electricity, let ZESA increase the tariff, because it does not make sense for them to say they are charging 9 Zim dollar cents and then there is no power. So if the tariff goes up, we will actually save because we are incurring more right now as we are using generators. So businesses want the tariff to be increased.
The understanding is that this tariff regime will help the power utility service its over $80 million debt to regional power suppliers and put an end to raging load shedding, which has affected production.
I'm told there should be some discussions around it maybe for this week's cabinet meeting, and we expect to hear what will come out of it. But it's way overdue. The tariff has to go up.
ZESA Holdings Chief Executive Patrick Chivaura says ZESA has undertaken various initiatives to ensure Zimbabwe becomes power sufficient by 2021. The development is anticipated to lead to a fresh wave of price increases as fixed costs for business rise. Finance and Economic Development Minister Mthuli Ncube recently said electricity tariffs will soon be going up. For the Mint, I'm Ndaka Majak in Harare.
Now, sources close to development say a tariff of Zim dollars 60 cents per kilowatt hour is what has been proposed for industry, while domestic consumers can start forking out Zim dollars 80 cents per kilowatt hour if President Emmerson Mnangagwa signs the proposed tariffs into law. Now, I'm joined here on the Mint by Kutunai Sharara, senior reporter at Business Weekly. Remember, I always tell you, if you don't buy the Business Weekly, then you're not following business in Zimbabwe. Kutunai, welcome.
Thank you, Andy.
Kutunai, okay, let's first be clear. We need a power tariff increase. There's no doubt about it. I mean, that's the bottom line.
Look, Andy, one of the reasons why we don't have electricity at the moment is because we have got a suboptimal, sub-economic power tariff. And so we need a power tariff increase.
We need one, right? But here's my question. Okay, already ZESA is suffering under a 1.2 debt that consumers haven't paid them. Okay, right. Increasing the tariffs. One, is that going to bring them more money? And two, will it make people pay again? Because I don't see how it can.
I think it also goes back to the legacy issues that we have, Andy. Remember, at one time when people had their debts written off, so there is that belief that if we don't pay at some point, probably towards the elections, we will have our debts paid off, written off again.
Okay, so please, pay your debts, because they're not going to be written off. I can guarantee you that, because no one writes off $1.2 billion and puts the parastatal in trouble and then blames the parastatal. Look, the Minister Chassi, when we had him once here on the Chase at ZTN, he said, look, I don't want to look at tariffs yet until I've tried to sort out the inefficiencies or even the corruption at ZESA. Is that a true statement?
I think it is a true statement, because I also believe that there are so many inefficiencies at ZESA in terms of power generation, power distribution. The fact that there are a lot of people who are actually not paying for their bills at the moment is one factor. Even when you look at it, there are some ZESA employees, most of them, they actually don't pay for electricity.
So there's hundreds of thousands of them, right?
Too many of them. And
okay.
So that will have an impact. So you need to sort out all those issues. You look at your executive packs that are there at ZESA, all these issues, you need to look at them. Even when you look at the tenders that they've been awarding left, right, and center, some of them advancing payments without getting service.
But having said all of that, tariff increases are coming.
Yes, they are definitely coming.
Right, now, we're going to cross over to Ndaka Majaka live to see exactly, have a bit of a comment about her. Ndaka, you know that Zimbabwe, honestly, I mean, let me be frank here, we are literally paying for electricity for free. It's the cheapest in the region.
We actually have the cheapest electricity in the region at the moment, but the Zimbabwe National Chamber of Commerce says that they're willing to bake a power tariff hike of up to 14 US cents, which is about 120 Zim dollars, $1.20 Zim dollars. So it'll be more than tenfold in terms of the increase for the power tariff.
All right, so the ZESA is looking at increasing it to about $1 or just above $1. Okay, so what will that actually mean? Because unfortunately, any increase in electricity costs obviously hurts the consumer, particularly in their pocket, with the attendant spin-off to other increases in prices.
Definitely, it'll spell another wave of price increases, because we've seen it happening in the petroleum sector. And if energy prices go up, it'll obviously translate to price increases. And I'm actually being told that ZESA has just published a new set of fuel prices, and fuel has edged up again to $7.55. So this is what's happening in the energy sector, and it's going to continue happening, and it will have inflationary pressures as it will lead to more price increases.
Well, there you go, Ndaka Majaka live. You know, it is going to be a problem. Consumers in Zimbabwe are already battling. They cannot make ends meet, and this is a fact. And an increase in electricity tariffs is only going to make it worse.
It's a catch-22, Andy. But what has happened is that we have been left at the lowest point without power for 18 hours, for some even for the whole day without power. So people are now saying, look, I better have that expensive power than not having power at all. So people have got no choice. We need to do that. But in the long term, it will have a huge impact on your pocket and disposable income.
But in the short term,
Short term, you'd rather have electricity, whether it's expensive or not.
Because that's the point, though. Even if the tariff goes up, are we going to have more electricity? I mean, the same problem. Like, we just have to pay our debts and then continue to service those debts. And without that, nothing is going to change.
But what the tariff increase does is that it allows ZESA to now be able to import from South Africa. Although it won't be enough, because the minister has been saying between 400 and 600 megawatts. And our shortfall is about 900 megawatts. So whatever we are going to import is not enough. But the tariff increase will allow ZESA to actually have the local dollars to pay or to buy foreign currency. At the moment, if the RBZ says, here's 10 million for you, give us the local currency equivalent,
they don't have,
doesn't have.
But here's another question. I read recently, I think it may even be in the Business Weekly, that the water level at Kariba has now gone down to 24%. And a couple of weeks ago, the minister said 28%. Very soon, there'll be no water in Kariba to be able to actually generate electricity. Because what are we going to do then?
Yes, so that's the other issue. Climate change is real, it's taking place, and it will affect our generation from Kariba. So we need to look at other sources of energy, renewable energy. I know the ex-ESCOM acting CEO, we recently got a license, and he was saying on his Twitter handle, I'm going to stop load shedding in Zimbabwe. I don't know how he's going to do it.
Well, I tell you what, you're welcome if you can do that. And of course, the tariff reduction in solar imports as well for solar panels and so forth, I believe they're coming in at no duty. At least government is aware that they need to make long-term plans and get away from hydro. Even if you look at the Batoka Gorge, it's going to take upwards of, 7 to 8 years, maybe 10 years to come online at a cost of over $2 billion. And then don't forget, we share that with Zambia. So really, we need solutions now, and I'm glad that Minister Chassi has taken that to heart, taken that on board, and is trying to come up with some form of energy policy. Now then, the government of Zimbabwe, through the Zimbabwe National Industrialization Development Policy, ZNIDP 2019 to 2023, seeks to facilitate the sustainable growth of industry development of new industries and the transformation and diversification of the Zimbabwean industry. The thrust of the policy is anchored on investments and innovation in the industrialization processes based on 11 pillars. The 11 pillars of ZINDP are development and strengthening of industrial value chains. You've got agro-based industrialization, mineral beneficiation, export-led industrialization, commercializing of intellectual property, heritage, natural advantage-based industrialization, ICT-led industrialization, emerging industries and startups, backward linkages with SMEs, and anchor industries and industrial clusters, and industrial parks and innovation hub. Now then, Kuzunai, let's focus on just a couple of these. Obviously, I would love to focus on all 11, but we haven't got time. Let's focus on agro-based industrialization, because we are an agro-based economy. Talk to us.
Right. I want to start with a comment on the overall national industrialization development policy. It lacks detail. I'm sure you've read it.
I've seen it. There is no detail. This is our hope and our plan.
Especially in terms of the how-to part of achieving those things. Now coming to the agro-based industrialization, I think it's a good plan. It's a good intention, because remember, we have got the arable land, and we've got one of the best agricultural land in the continent.
Right.
And we can be able that whatever resources that we are importing now from other countries, we can actually grow those resources here in Zimbabwe on our land and be able to feed into the manufacturing sector. That's so I think it's a good plan.
It's a good idea. And of course, I mean, as I said, we haven't got time. We will have to go just now. But we've got export-led industrialization and ICT-led industrialization. Now, the reason why I picked on those two, of course, is that exports. Everyone keeps saying this. We need to produce. We need to export more. So any policy that helps to put all our industry together to work as one voice, because we're not working as one voice in certain areas, are we?
Yeah, that's true. Export-led industrialization is also good. But what we need to do, and like I said earlier on, is to enable industry or players, economic players, to be able to actually manufacture products, to able to grow products. We have got so many impediments that still needs to be fine-tuned to make sure that when we say export-led industrialization, we are actually facilitating business to be able to do that. At the moment, if you talk to the guys at Zimtrade, they'll tell you that there are so many impediments to export.
So we need to fix that. And the one, what I call the elephant in the room, of course, is old and aging equipment. Retooling. Government in this policy did say they would look at new forms of finance, whether it be some form of long-term lending and so forth, because our equipment is 30 to 40 years old very quickly, and it needs to be retooled, doesn't it?
Yes, we need to retool, and to do that we need foreign direct investment, we need foreign capital to come in, because most of these equipment are actually imported from outside the country. So you need to make your environment conducive for those who can lend us money or come and invest, for them to feel comfortable in coming into Zimbabwe.
Kuznai Sharara, senior business reporter at the Business Weekly, a newspaper I always urge you to get. Well, that's it for today. Let's hope that Zimbabwean industry makes use of the national industrialization policy and obviously puts it to good effect to help drive the economy forward. Well, that's it for the Mint for today. As you know, I'm with you every morning, 10 a.m. here on ZTN Network, of course, Zimpapers TV Network Facebook page and website ztn.co.zw. Please go to our website, because 3 days, 3 times a week, Monday, Wednesdays and Fridays, we have Extra, your top entertainment show, and Dreamstar starts on the 31st of August, so keep an eye out for programming details there. Heartbeat, of course, every 2 weeks, and tomorrow at 2 p.m, The Couch, the only sports show that you ever have to watch. And of course, tomorrow evening, 6:30 p.m, The Chase, live from the venue here in Avondale. We're talking about Zimbabwe's political dialogue, the final solution. I'll be your host with Blessing Manatsi, so please don't miss that either. Well, that's it for the Mint today. Of course, I will see you tomorrow morning. All that's left for me to tell you is have a great day and you all be safe. Goodbye.